for our 15th episode of Equity Explorer. I'm Karina, a global equity investment specialist at Fairtree, and I'll be moderating today's discussion. Just to give you some brief insights on Equity Explorer, it was designed as a teach-in on key themes in equity markets, offering deeper insights into industries, companies, and trends that are shaping global investments. Our goal is ultimately to give you the tools to better understand the forces driving markets and to highlight potential opportunities. However, please do note that this is not financial advice and does not represent a deep dive into our portfolios. Just to give you some insights into this session, so Ashen will unpack how AI has transformed Micron, SK Hynix, and Samsung opposition. Send through questions during the presentation, and we'll try to answer as many as possible at the end. With that, I'd like to introduce Ashen, who will take us through today's deep dive. Ash, over to you.
Thank you, Karina, for the introduction, and warm welcome and thank you to all of you who joined online for the session. I'll just start off by quickly pausing on this disclaimer. You're welcome to access the disclaimer on our website or from Karina if you'd like to go through it in more detail. All right, so I think just to give some context on what we'll be talking about today. Firstly, memory is obviously very topical at this stage, and I'll start off with some context as to how this current cycle has been driven. Then I'll go through some of the important 101s on memory semiconductors and what is memory effectively, and then dive into the industry and some context longer term, and then we'll end off with an opportunity for any questions. Okay, so what I've got here is in the orange bars, it's share price change in US dollars over the last 2 years, and the black bars are earnings per share changes also over the last 2 years. And what you can see is we've had significant increases in the share prices of Samsung, SK Hynix, and Micron. But at the same time, we've had significant increases in earnings per share as well. So the important point here, this has been an earnings-driven cycle and it hasn't been a re-rating driven cycle, which we've sometimes seen in the past. As you can see, the memory names have significantly outperformed the MSCI EM index and the MSCI ACWI index. For some more context on price to earnings multiples, this is on a forward 12-month basis. Just wanted to flag that Samsung and Hynix are trading at a 6 times forward PE and Micron at a 10 times forward PE, well below both the MSCI EM and the MSCI ACWI indices. So there has been a lot of talk about these PE ratios that these companies have been trading on. But as I'll show further on, price to earnings has not often been a reliable metric for valuations of these companies due to the extreme volatility in pricing and how the cyclical downturns can be very aggressive. Here, what I've done is I've taken all 3 memory companies, aggregated their earnings per share in US dollars in the orange area and in the graph, and then I've taken the median and the average PE for the industry for the 3 companies. And the important part to note here, given the cyclicality of the industry, you generally see when earnings peak, when the orange bars are close to a peak, you see PE multiples at a trough. And the reason for this is the market is generally very efficient in understanding when we are close to the peak of the cycle. And the market is also very aware of the aggressive downturns where companies can often be loss-making at the trough of a cycle. If you look at the current PE ratios, it's suggesting that the market feels that we are close to the peak of earnings at this current stage. And then what we've traditionally done, and the industry's traditionally looked at the memory names on a price to book basis rather than a price to earnings basis, because memory chips inherently and historically are commodities with violent earning cycles driven by pricing. So the peak to trough swing can be quite aggressive. And in downturns, as I've mentioned, these companies can be loss-making, so a negative earnings based on a PE multiple doesn't make sense. And the reason why the industry has looked at book values is book values are more stable, and they're anchored in the assets of the company, so the manufacturing plants and the equipment which drive future earnings. But what you can also see there is both Micron, Hynix, and Samsung are trading at well above peak price to book multiples. Then just for some context as to why these companies are so important in the EM space and the global space, what we've got on the left here is just Samsung and SK Hynix as a percentage of the MSCI EM index. And you can see combined, they're now 15% of MSCI EM, so becoming a lot more important. And I think it's become a lot more important to have a very strong view on these companies. If you go back 2 years ago, the combined MSCI EM weighting for these two Korean companies was 4.5%. So significant increase from 4.5% 2 years ago to 15% currently. Then on the right, this is MSCI ACWI. Please excuse the label, which is incorrect on the top, or the title on the top. But if you look at include Micron in that picture, you can see that the weighting in the MSCI ACWI has significantly increased 3 to 4 times for all of these companies. So combined, almost 3% of the index currently. Then, if we consider the EM index more broadly and we look at a country weighting, what you can see is that if you look at Korea and the green bars, 2 years ago it was 9% of MSCI EM, and now it's 21% of MSCI EM. And the big driver of that is Samsung and SK Hynix driving up the weight of Korea in the index. But at the same time, you can see, and I won't talk about Taiwan Semiconductors in this session, I've talked about them previously. Taiwan as a country is now larger than China in the MSCI EM. And then there's been a lot of talk about the AI cycle and semiconductor growth, but I think it's very important to separate semiconductors into memory semiconductors and other semiconductors. So all semiconductors excluding memory. And this is just year-over-year sales growth in memory, which has grown north of 350%, the most recent quarterly print, versus 33% for the rest of the semiconductor index. So now I'll just give some more context on, what is memory, what are the different types of memory, and where does memory lie in the broader semiconductor landscape. Okay, so those of you who joined, let me just grab my pointer. Those of you who've joined the previous session I held on the equipment semiconductor players, they fit in on this gray bar over in the middle here. That's ASML, Applied Materials, Lam Research, KLA. These are the picks and shovels of the industry supplying all of the equipment necessary to manufacture the semiconductors. On the top end here, you've got predominantly what's referred to logic semiconductors, and on the bottom in the green, memory semiconductors. So the best way to think about this is logic semiconductors do the thinking, and the memory semiconductors remember what data has been created. Another way to think about it is logic is the chef cooking the meal, and memory is the pantry with the recipe, where all the recipe cards sit. So what's important about the memory names in particular, and maybe a bit distinct from some of the logic names like NVIDIA and AMD and the likes that we've talked about in the past, is that all of the memory semiconductor companies both design and manufacture the chips themselves. Whereas with some of the logic names such as NVIDIA and AMD, we know that they design chips themselves, but they don't manufacture themselves. So they're capital light in nature. Okay. So there are broadly 3 different types of memory semiconductors which we need to understand. First of all, we've got what's referred to DRAM, or dynamic random access memory. So I've got a few pictures of this in the bottom. So some of you would know that, for example, once your computer starts to slow down, you might increase the RAM capacity in the computer, and this is DRAM. So this is memory which, for example, if you've got multiple tabs on your computer, open on your computer, that the computer will remember what's in the tabs which are not currently open. So when you move to a different tab, you'll be able to access whatever information is on that tab. Then you've got high bandwidth memory, or HBM, as it's referred to. And this is a relatively new type of technology, predominantly used in data centers. And further on, I'll give more detail on the specifics around this and why this is so important. And then we've got the NAND memory, or non-volatile memory. So the examples of this is your storage in a computer, or flash drives, as you can see in the bottom right. So NAND stores memory even once your computer's turned off. So it keeps all of that data stored so that when you switch your computer back on, you're able to access all of that memory. Okay, so what is high bandwidth memory, or HBM? So just broadly speaking, what's different from HBM versus traditional or conventional DRAM is that HBM is stacked on top of each other. So as I've said here, it's a skyscraper, not a suburb. Then importantly also, HBM chips sit on top of the logic chips. And then HBM also has significantly more bandwidth. And the way you can think of bandwidth is number of lanes on a highway, whereas traditional DRAM would have maybe 2 lanes on a highway, allowing traffic to flow. HBM might have 20 lanes on the highway, allowing you to process a lot more data simultaneously, which is obviously important for AI applications. Then HBM is also more tailored. So it isn't as commoditized as traditional DRAM, where you can, for example, on your computer, use a SK Hynix chip or a Samsung chip or a Micron chip to be swapped out to improve your RAM. For HBM, it is very much designed with the AI rack in mind, with the particular AI rack in mind. So just to give some more context on the capacity of HBM. So as you can see, I've highlighted the capacity of HBM, so that's 20.7 terabytes approximately. And to put that in context, if you had to have 5 million songs, that would use approximately 2 terabytes. So that is a significant amount of memory that you are using in HBM, and the capacity is increased significantly versus DRAM or NAND. Okay, going into the industry, giving some context on the market more broadly. So just gonna switch off my pointer. Okay, if I start with the NAND market on the left, what you can see is Samsung dominates the market, followed by Kioxia and WDC. SK Hynix has 16% share there. And in the red, I've shown the dominant Chinese player in the NAND market. That's a company called YMTC, which is unlisted. But you can see relatively stable market share for Samsung, as well as for Micron, as well as SK Hynix. If you look at the DRAM market, a bit more oligopolistic, with 3 dominant players. Samsung also relatively stable market share over the last 8 years or so. SK Hynix also with stable market share, Micron, and then in the red, or the purple bars with the red text, that's a Chinese company called CXMT, also an unlisted player. If you go back in history on the DRAM market, about 15 years ago, you had 12 companies playing in the DRAM market. The market has consolidated significantly, and now there's 3 big players that dominate. Then if we think about the end markets in which NAND and DRAM is sold into, historically, if we look at the NAND market, first of all, we had mobile phones being a massive market. And you can see more recently the blue bars with the black text. You can see data centers or servers are taking a larger portion of end demand. And then for DRAM, you see the same sort of picture where with DRAM, it was traditionally PCs, which accounted for most of the end market demand. And now servers are becoming a lot more important in the end market demand. And then with regard to the three particular companies, if you look at the split in revenue between their DRAM and NAND businesses, Micron is over-indexed to DRAM. 80% of their revenue comes from DRAM. SK Hynix, a little bit more balanced, but still 70% coming from DRAM. And also Samsung is the most balanced with 60% of the business coming from DRAM. And what is very important here is that in the NAND market, the Chinese big player YMTC, which I showed in the previous graph, has been able to keep up with the NAND technology a lot better than the DRAM technology. So the NAND market has slightly different dynamics than the DRAM market, where with HBM chips, for example, you need EUV technology or EUV equipment sold by ASML in order to manufacture your latest HBM chips. Whereas on the NAND side, the Chinese player has been able to develop and produce very impressive NAND technology, which is very much comparable to the Korean names as well as Micron. Then what's different about Samsung? So I've shown Samsung here in particular. So both SK Hynix and Micron are pure play memory names. So, 100% exposed to memory. Whereas with Samsung, it's a much more diversified company. So what I've got here is on the left is revenue mix. So they disclose 6 different segments. So in the black here, you can see their memory mix in terms of their revenue, and memory is about 50% of their revenue currently at the latest quarter. And on the right, just want to show that memory, as I'll explain in more detail going forward, is you can see the revenue growth in memory can be a lot more volatile. But in the peak of the cycle, and we've seen in previous cycles as well, you get very strong growth in the memory segment, which is an important part of the business. Then for Samsung, the consumer electronics business, you can see that's an ex-growth business. They've been struggling with a lot of competition from cheaper Chinese consumer electronics. And then on their mobile side as well, we know that market is a lot more mature, also with a lot of competition from Chinese players. They've also then got a display business, and they effectively manufacture screens for computers and for smartphones. And then a small part of the business is a business called Harman, which sells into the auto end market. Then what's quite striking here on the left here is if you look at the operating profit mix for Samsung, currently memory is 90% of the operating profit. So a very important driver. And you can see the operating profit margin posted by their semiconductor segment, which also includes their foundry business, or the business which outsources manufacturing as a competitor for TSMC, is significantly higher than the rest of the different segments at the moment. And that's obviously driven by the impressive price increases that we've seen in the industry more broadly. But at the same time, as I've shown before, your consumer electronics segment posts very low margins. Your IT and mobile segment also relatively low margins. But the key driver and the key driver of volatility and the key driver of the business long term is understanding the semiconductor market, and more specifically the memory market, and how that influences Samsung's earnings potential. And as you can see here also is, not long ago in 2023, we went through a significant downturn in the memory industry, and their semiconductor segment was posting losses. So you can see those operating profit margins being close to negative 30% in the trough of the last cycle. Then memory pricing is inherently deflationary. So this is just a long-term graph of blended DRAM average selling prices, and you can see that over the long term, and the same holds true for NAND memory, is this industry is inherently deflationary because there's always new tech innovations. And then there's always, new capacity coming from China and other competitors on the legacy equipment or the legacy memory chips. So naturally, this is a deflationary market. Then if we dig into some of the key drivers here, we've got DRAM on the left-hand side graph, and in orange is blended average selling price growth. In the black lines, you've got supply growth. And as I've stated before, there is significant volatility in pricing, and that's driven by where we are in the cycle, where demand currently sits, how much of inventory is sitting with the manufacturers, how much of inventory is sitting in the channel with the distributors, and how much of inventory is sitting with the customers themselves that are assembling these consumer electronics or the servers. The same holds true for NAND. And then just some more context on where we are currently. So the significant growth has been posted. So on the left here, this is just memory revenue growth for the three different companies on a quarter-over-quarter basis, just showing the near-term trends. And we can see that revenue growth has been accelerating for a number of quarters. And operating profit margins are at unprecedented levels, which we haven't seen before, going back 20, 30 years. So this current cycle that we're in is often likened to the 1990 to 1995 window cycle. So this particular cycle on the left, this is just a depiction of that cycle, the market size of the DRAM market in the red bars, and you can see that cycle lasted for 5 years. And in that particular cycle, revenues for the DRAM market on aggregate increased 6x. And if we look at where we are in the current cycle and where 2026 DRAM revenues on an industry level is tracking, we're on track to 10x revenue from the previous trough. So it just shows that if we look at the previous, massive or the biggest cycle we've had in the past prior to this current cycle, we're tracking 10x growth versus 6x growth there. In the current cycle, we 3 years into the cycle. In the 1990 cycle, it's a cycle that lasted 5 years. So that does give us some context for how long the cycle could potentially last. But in terms of growth, absolute growth, we have seen more growth in this current cycle. Then I'd just like to give some context on the downturns and the aggressive downturns that we've seen in the past. So this is also using DRAM past cycles as an example. And what we show here, if we look at the table, and I've highlighted the average selling price declines in that particular downturn. And you can see there's very aggressive downturns that you see. What happens is demand slows. There's too much of capacity in the system. A lot of the memory manufacturers continue to produce because they don't want to run their factories at very low utilization rates because there's obviously a lot of fixed costs involved. Inventory build up and memory pricing naturally declines. Then what we've done is we've spent some time looking at the previous 5 cycles and just try to get some indication of what management generally guide and their visibility with regard to where we are in the cycle. And just a few observations which are worth noting is that these memory companies typically remain bullish to the end, and they don't flag things such as inventory risk or peak pricing. So it can be quite dangerous to rely on management outlook. So I think you need to have a more informed view of the industry holistically and a bit more objective rather than just listening to management commentary. Then long-term agreements is a relatively new language which has been used. And this refers to companies talking about, also companies such as Samsung talking about securing 3 to 5 year contracts, particularly on HBM memory. So typically for conventional memory, so sort of pre-HBM, pricing is negotiated on a quarterly basis. So as you can imagine, not a lot of visibility for the memory companies. But what's very new here is that there's suddenly talk of 3 to 5 year contracts, which obviously gives these memory names a lot more visibility into growth and earnings, but could also potentially reduce volatility in pricing and volatility in earnings as a result, going forward. Then in terms of CapEx signal, so this is obviously very important because when these memory companies tend to invest aggressively, what's happened historically is they've overbuilt because they've assumed the cycle would run for longer than it ultimately did run for. And as a result, you sit with a situation of too much capacity, too much of supply and demand not being able to keep up with the supply that's been built. But again, in terms of management commentary, and what we've noticed is that these companies often frame CapEx as technology-led or demand responsive, and they never admit that CapEx is speculative. Then there's a few different aspects of this current cycle, and I've got some more graphs later, which I'll dive into a bit more. But HBM memory is diverting capacity away from conventional DRAM. So an HBM chip uses 2 to 3 times the wafer area versus a conventional chip. So, for every 3 DRAM chips that you were producing, you're now producing 1 HBM chip with the same resources. And then what companies are also talking about now, and particularly the 2 Korean companies and Micron, is that they're now pursuing end of life on some of the legacy chips. So they seem to be a little bit more disciplined in understanding that there is long-term competition coming from China. And as a result, it might not be prudent to invest in increasing capacity too much on the conventional non-AI chips. So this is another factor which is another unknown and increases complexity. I've got a few pricing graphs here just to give some context on, firstly, on the DRAM market. I've just chosen 2 samples of chips. So on the left is a typical leading edge PC DRAM chip, and you can see the spot prices have increased 8x in the last year and a half. And if you look at this equivalent for server chips, you also see significant 5x increase in spot prices there. For NAND memory, you see a very similar picture, sort of unprecedented increases in pricing, spot pricing more recently. You have started to see more recently a small downturn in spot pricing for the NAND market as well as the DRAM market. But as I've mentioned, the talk of new long-term 3 to 5 year contracts is quite new. So if you're talking about 3 to 5 year contracts, then spot pricing isn't as reliable because those prices would be locked in typically for 3 to 5 years. And then on the HBM market, I'm just showing some pricing data for HBM as well. And we've seen not as aggressive price increases for the HBM market. So there's been a lot more volume growth coming from hyperscalers and AI applications. And then on the right, just want to flag your sort of market share on the HBM side. So what we saw in 2024, you can see Samsung was still a very important player with 40% market share in 2024. And that declined to half of that in 2025. And the reason behind this was Samsung had a technology misstep in 2025. They were trying to produce a new leading edge type of HBM, and they used different technology which they thought would improve their efficiency and be supportive of growth. And as a result, they didn't participate in the initial AI cycle, demand cycle, and the initial NVIDIA and AMD and Broadcom AI racks. But what they've since been able to do is produce new HBM chips, and they've kind of caught up with the other incumbents, Micron and SK Hynix. Inventory is another very important indicator that we watch. As you can imagine, as I stated before, typically when these companies start to build inventory aggressively, it is a sign that demand is slowing and pricing will start to decline. But as you can see, sort of more recently, you can see inventory levels particularly on a relative basis or relative to sales for all three of these companies, has declined quite significantly, which is more evidence that demand remains quite strong. What we see on the CapEx front, so looking at CapEx on an annual basis for these three different companies, you can see for the last 2 years, there's been significant increases in absolute CapEx, the orange bars. But given the very strong growth we've seen in revenue, CapEx relative to revenue or sales has not increased that materially. And this is what I mentioned before as well. It's what we refer to as the HBM replacement factor. And as I've said, is one HBM chip requires the same wafer area as 3.5 DRAM chips, currently in 2025. So that is another important factor. So even though you might see increases in CapEx, the amount of resources being consumed by HBM is significantly higher compared to conventional DRAM. So CapEx signals are slightly different this time around. Then, following on that point, this is wafer starts, and wafer starts just refers to effectively new production. And what you can see there is what we've seen more recently and what we're expecting in the next, these are UBS estimates, but we expect from the DRAM side on the left, we're not going to see significantly new or significantly material growth in new production because HBM chips are consuming a lot more of capacity. And for NAND, what we see is Samsung, Hynix, and Micron have been a lot more disciplined because they recognize the risk of Chinese players becoming more important and starting to invest also quite aggressively. So we haven't yet seen significant growth in new production. And a lot of the CapEx being spent now is going towards shells. So effectively producing the infrastructure, the buildings, and preparing the land before new production will begin. Another important factor to remember when looking at these companies is we at Fairtree spend a lot of time on free cash flow, understanding the cash generation of the businesses. And these are just historical free cash flow conversion numbers of free cash flow over net income over a 5-year and a 10-year period. And what you can see is these companies tend to convert, typically less than 50%. If you look at all three on an average basis, less than 50% of their net income into free cash flow. And that's obviously because of the significantly capital intensive nature of the industry. What we also see, and it came out in the previous the previous graph I showed as well, is that a lot of if you look at the capacity being added, expected to be added in the next few years, a lot of the capacity growth is coming from these orange bars, which is HBM capacity. So most of the new investment is going in towards these AI chips on this AI side of the business. And then the AI sort of consumer market, or the consumers or the customers of HBM are still relatively concentrated. So NVIDIA, by estimates, is 62% of HBM demand in 2026. So we still have to understand that most of the demand and growth is still being driven by a handful of customers, and still very much reliant on the AI cycle continuing to run quite strongly. Then another element which is quite important is what we've got you on the left is these are different NVIDIA chips by generation, and they've all got their own naming convention. So if I just grab my pointer, if we look at 2025, the Blackwell chips are the Blackwell 100 and the Blackwell 200, and then the Blackwell 300, which was released a few months after the Blackwell 100. You can see there was a 50% increase in the content of HBM that's required in a Blackwell 300 chip. If we then go to the Rubin chip, which is being released later this year, we will see, again, as different iterations of the Rubin architecture are released, significant increases in the content of HBM required in these chips. We see a very similar picture for AMD. What we've also seen is some demand destruction come from the higher memory prices. So in particular, what we've got on the left here is memory as a percentage of the bill of materials of various different products. So blue is the NAND bill of materials, and yellow is the DRAM bill of materials. And if we look at, for example, AI PCs in the middle, you can see 25% of your bill of materials goes towards memory. And traditional PCs, 28%, and so on and so forth. But the important part here is that what we've already started to see, and we probably will continue to see, is that there's certain consumer products in particular, and in particular low-end PCs, low-end smartphones, and mid-range as well, which are starting to see a bit of demand destruction as manufacturers start to put up prices. So we've seen with the Chinese handset makers, for example, the Chinese smartphone makers such as Xiaomi have started to put through quite significant price increases on their new phones, on their mid-range and low-end new phones. And as a result, we started to see significant declines in demand from that aspect of the market. So that is another sort of headwind which we continue to monitor and is quite important for more conventional DRAM and conventional NAND. Then just want to highlight China. So what we've got in these green bars here, as we can see, capacity located in mainland China was 10% in 2019, and that's grown to almost 25% in 2025. And that could continue to grow quite significantly as well. The problem with China is that we don't have visibility into the two big memory makers because they're not listed, so we don't have much visibility into their earnings and revenue and capacity and so on and so forth. But what we do know is that there will be quite a bit of new capacity added until 2028 in China, but this is sort of Korea is adding a bit more capacity than that at this stage. But just flagging that does remain a bit of a headwind and an unknown for the market. That's it for me. Karina, I'll hand over to you to facilitate the Q&A session.
Brilliant. Thank you so much, Ash. That was a really insightful session. Maybe we can kick off with some questions that have come through. The first one would be Samsung has recently been certified at NVIDIA and has announced their HBM4 product. How does this impact industry supply and pricing?
Sure. Thanks, Karina. So with Samsung, as I mentioned before, they had a significant technological misstep at HBM3. So the fact that they've now been able to produce and they've shown off at the latest tech conference the HBM4 chip, it does display what we've known historically. Is Samsung have traditionally and historically been ahead of the curve in terms of technology. So, for example, they were the first company to use EUV technology in DRAM, a good few months ahead of Micron and SK Hynix. But it shows that their technological sort of ability hasn't completely been eroded. So what we also know is companies like NVIDIA naturally want multiple sources of supply. So it's in their interest to have 3 suppliers rather than just 2 suppliers. And then if we consider what's being said, not just by the memory companies themselves, but if you listen to the commentary from the big hyperscalers, Microsoft, Meta, Amazon, Alphabet, they're talking about significant demand. They're talking about not being able to satisfy all of the demand for tokens which they've gotten on their AI data centers. And then interestingly enough, we also had a few other analysts attend conferences in the US and China, and from their meetings and some of the analysts attended meetings from Chinese companies such as Tencent, and then a few of our other analysts met with various other US tech companies, and the commentary seems to be quite consistent that demand is very strong and they're not able to satisfy the demand. So given that, and given what I've shown in terms of the fact that content of HBM is increasing in almost every new generation of data center server and rack being produced, demand does look quite strong to be able to enable Samsung to still compete quite nicely in this market without significant erosion.
Fantastic. Thank you. Next question. What could make this cycle different from previous cycles?
Sure. So there's a few different things. So I think what's important firstly is this a new language of long-term contracts. So that's something we haven't really seen before. So, all three of the memory companies are talking about 3 to 5 year contracts, which they are negotiating or have negotiated with big customers. So naturally, if you think about 3 to 5 year contracts, what this will do is secure pricing. So it naturally leads to greater visibility for these companies, a better ability to plan and spend capex more sensibly, and then less volatility in profits. And then what we really are looking for now is to see whether the financial commitments which have been talked about more broadly show up on the balance sheets of these companies. So currently, even though these companies have started talking about long-term agreements, we haven't seen any of these financial commitments come up on the balance sheets yet. So I think in the next quarter or two, we'll closely be watching these balance sheets and looking for evidence of how strong these financial commitments are. Because historically, even when they've talked about contracts for a year or two, these often have been without financial commitments. So as a result, the ability for customers to cancel these contracts has been a bit higher. So that's I think what could make the cycle quite different. On the other hand, we've also got aspects which could make the cycle end a little bit earlier than expected. So as I've shown, I think primarily the demand for AI and the growth in AI demand will be the key driver here. So if capex does slow materially or decline even for the hyperscalers, then we will start to see the share prices correct quite meaningfully. Then another big unknown is technological innovation. So, new technologies which require AI servers to use less memory could be a material headwind as well. It's difficult to predict how technology plays out. And then the third point I'd mention is these Chinese companies and how they, what they're investing in, what capacity they're investing in, how quickly they can bring the capacity online, how quickly they can convince Western customers to start using their memory chips. So those are the three factors which could end the cycle more abruptly.
Fantastic. Thank you so much, Ash. I think we will call it there. So thank you for the presentation and thank you to the audience for the engagement today. If you have any further questions or would like to continue the conversation with us, please feel free to reach out to myself or Ash or anyone else in the team. And yeah, thanks again for joining. Thanks, Ash, for the presentation. And we look forward to seeing you all on the 9th of July. Cheers. Thanks.
Cheers. Thank you.